Okay, all right. Well, thanks for sticking around, guys. I'll get right into it. Don't have much time here. So as I mentioned earlier, Skyharbour, high-grade uranium, Athabasca Basin story. Spent the last four and a half years building up the project portfolio, have one of the most dominant land packages in the Athabasca Basin. Recently just partnered up with two strategics, one in Denison Mines. They're the one of the largest publicly traded uranium companies out there, listed on the New York Stock Exchange. Happen to be our largest shareholder. The president and CEO, Dave Cates, is on my board. And then France's largest uranium mining and fuel processing company called Areva is acquiring one of our projects now for $8 million. So it's important not just having a good project base and team, but we have some fairly large strategic partners as well that we've been able to wrangle in. So just getting into the people here. Rick Kazmersky, I want to highlight. He's the head geologist. As I mentioned earlier, I teamed up with him about 4 years ago. He's found a lot of uranium in the Athabasca Basin. He spent over 40 years in there. He was the exploration manager at Cameco, the world's largest uranium company, for about 10 years. He's credited with making a handful of high-grade discoveries, and I managed to get him on board here when he had just sold his company, JNR, to Denison Mines. So him and I been working together for the last 4.5 years. We brought in Dave Cates as well, and as I mentioned, Dave is the president and CEO of Denison Mines. He's been a huge addition for us and our team, running the company that is our largest shareholder. Last but not least, worth noting, a gentleman a lot of you probably know, Paul Mctizic. Paul's a true mine finder and company builder. He's built and sold 4 mining companies in the last 12 years. He's become a large shareholder of the company, a strategic advisor, just coming off of Lithium X, which he sold for about $270 million. His biggest win was actually a uranium company called Energy Metals Corp, which he built and sold and in 2007 for almost $2 billion. So he knows a thing or two about getting these companies sold, and I'll emphasize that is exactly what we're trying to do here at Skyharbour. I was with a gold company before called Bayfield Ventures, made a high-grade gold discovery, and we ended up selling the company to New Gold. So as investors and shareholders in the company, that's the exit strategy, and that's what we're working towards. On the cap structure here, pretty straightforward, 54 million shares out. So we're still a small cap, around $26 million valuation. Still a lot of upside from here. A couple $1 million in the treasury, so that covers all the upcoming drilling that we have planned at our flagship Moore project. Just want to highlight some of the key shareholders here, management and insiders. We own over 15%. We have a lot of skin in the game, right? That's our payday. When we get this company sold, that's when we all win. Marin Katuza, who obviously a lot of you know, he's been a cornerstone investor from day one. Him and his hedge fund, KCR Fund, which is actually a reporting insider. They're the second largest shareholder behind Denison Mines. You'll see a few of the other names here. Doug Casey, Jeff Phillips, who runs a private family office. Handful of institutional investors have taken pretty large positions in the last year and a half, and just want to highlight that point. A fund out of China, a couple funds out of Europe and New York and Toronto. So we're starting to see some more institutional interest come back into the space. I think that's telltale of what's coming in the uranium market. Sophisticated and smart money is starting to come back in as the contrarians and value investors see the opportunity in the space. So the uranium market, again, I could spend hours on this. I'm more than happy to talk more at our booth, but I just want to highlight some of the recent developments. I gave a speech in San Francisco that some of you were at, but there's been a couple of other notable developments since then. In particular, Cameco announcing the shutdown at Macarthur River, the world's largest producing uranium mine. That's 15 million pounds that's going offline this year. It's just shutting down as we speak. As of February 1st, it will no longer be producing uranium. They're slated to go off for the year. If the prices don't increase, you'll probably see that pushed out further into the future. Give you guys some perspective on that. That'd be like waking up tomorrow and Saudi Arabia is no longer producing oil, right? So you have Cameco, the world's largest publicly traded company, producer, shutting down their largest mine and their largest production. And then you also had, just in December, about a month ago, Kazatomprom. A lot of you are familiar with Kazakhstan as the largest producer. Almost 40% of annual primary mine supply coming from one country, which is Kazakhstan. Kazatomprom has now announced a 20% cutback over the next 3 years. That is massive, right? Again, that's another 10 to 12 million pounds of supply going off this year. So collectively, Cameco and Kazatomprom, you have combined 60% of global primary mine supply that is now shutting down their biggest, lowest cost mines. And I think that's another important thing to highlight here. Look at this cost curve. We're talking about the bottom quartile of that cost curve being shut down. When these higher price contracts that have basically been the lifeline for higher cost producers, marginal producers to stay online, when those contracts roll off over the next 5 or 6 years, 70% of them rolling off in the next 5 years, those companies in Australia, in Africa, and other parts of the world where it's higher cost aren't going to have a leg to stand on unless the price of uranium significantly increases. So my guess is this is just the start. You're seeing the bottom quartile go offline. I think you'll see a good chunk of the upper half of the cost curve go offline in the next few years unless you see the uranium price spike dramatically. So I'll get right into our projects. A lot of you know the Athabasca Basin. It is the #1 jurisdiction in the world for uranium. It's the highest grade depository. It just so happens to be in the #1 mining jurisdiction in the world, which is Saskatchewan, as ranked by the Fraser Institute. This is the richest type of mineral ore that's out there. 1% uranium, or U3O8, which is a mediocre grade, is equivalent to 20 grams per ton of gold. For the gold bugs out there, 1,400 grams per ton of gold, 14% copper. Think about that. If we drill 10% uranium, we had one drill hole where we had up to 21% of it. You can't even get that in a copper deposit. That's many hundreds of a percent of copper. So that's a very important point, because even in a depressed uranium market, we can still create a lot of shareholder value through the discovery process, much like you've seen with NextGen, with Fission, with Hathor, which was bought out by Rio Tinto. We don't need a $100 uranium price to make this work. If we see that, if we see the price moving up, which I think we will see, we'll benefit from that. But we can still make this work even in a low uranium price environment. So that brings me to the last point here, the projects, the assets. This is really what distinguishes Skyharbour from the few other companies that have survived this tough uranium market. We've done a fantastic job building a project portfolio that will be re-rated in a better uranium market. You can see here, scattered throughout the basin, we have 5 projects, one of the largest land packages, ranges from earlier stage exploration to more advanced stage exploration, 2 deposits, one of which is a higher grade shallow deposit at our flagship Moore project, another deposit at Falcon Point. One of the things that Skyharbour offers investors as well, we have a dual-pronged approach strategy to creating shareholder value. One is high-grade discovery potential. We all know what that looks like. Look at NextGen, $30 million to $1 billion. Fission, $30 million to $400 or $500 million. That's first and foremost. That's where you'll see most of the news flow over the coming months as we get back to drilling our high-grade Moore project. But unique to Skyharbour, we also employ the prospect generator model. You've heard this used here. We love that model, but we want to make sure that we offer that exponential return on a discovery potential, so we have that at Moore. So I'll just quickly cover the few projects here. Moore Lake, as I said, we're starting back up here in February, 5,000 to 6,000 meters of drilling, going back into the high-grade Maverick zone. One of the things we're doing right now, and this is the first time that this has ever been done in this part of the basin, we're flying a drone geophysical survey. One of the biggest things you're looking for here are called cross-cutting structures on your main conductive corridor. If you're flying a fixed wing or a helicopter, you can only get down to 50 to 100 meter spacings. That's in this game, that's a big area. You can have a lot of uranium within 40 or 50 meters because it's so high grade. So for the first time, we've contracted a group out of Saskatchewan that flies unmanned aerial vehicle surveys. This will give us 20-meter spacings. This could be the key to unlocking new high-grade discoveries on this project. We'll start the drilling in February once we get the results from that program currently underway, so look forward to that. The other projects here, as I mentioned earlier, the second strategy for us, prospect generation. We've managed to get France's largest uranium mining company and fuel processor, Areva. Areva's coming in, an $8 million deal that we consummated last year with them. They're funding all of the exploration over the next 6 years. We get some cash payments as well. We have another company called Azincourt that's come in for a 70% interest as well. Again, similar deal. We get cash in stock and they fund the exploration. So this allows us to have multiple irons in the fire. We can focus on our high-grade Moore project, but we have the other projects being advanced, the work being funded by partner companies and strategic partner companies at that. So I'll just finish off again. Three key points here: people, timing, and projects, right? We have the right management team, both on the corporate side, the technical side. Rick Kazmersky and our geological team have made many discoveries in the basin. This is focused expertise on high-grade uranium deposits in the basin. We have some notable shareholders, which I went through. Timing with the uranium market, I really think, look, you've had the two largest producers that account for almost 2/3 of global production announce they're shutting down their best, lowest cost mines. They're going to force that price higher. So I think you'll see a significant move up in the price this year. More than happy to talk more on that at our booth. And last but not least, the project base. I think we have a one-of-a-kind project base. $80 million in historical exploration has been spent on these 5 projects. We've spent less than $4 million Canadian acquiring them. So that just gives you an idea of the re-rating potential here as we see a rising uranium price. And we're using the most cutting-edge, innovative techniques to go find more high-grade uranium and hopefully become that next-gen fission Hathor, working towards a takeover at the end of the day. Thank you.